Hello, everybody. Let's do a very quickish update on forward and on PLYM. And I'm also going to talk about a CVR quickly. So let's do all those. And let's start with forward. So, forward had an article yesterday in Axios Pro and set the stock to like $16. And now the stock is above where it was trading before the article at 2070. I have not sold my forward. I actually bought some more on Monday, yesterday, though I trimmed some of it on Friday after the BHF blow up. So it's like a 23% delta adjusted position now, 13% common. The rest is all calls and call spreads every month, basically, as far as the eye can see. Um, if you look at Seeking Alpha, you can see a summary of the Axios Pro article. I have seen the actual Axios Pro article, but I can't share the exact details in it because I told the person that showed it to me I wouldn't. There's not much more in there other than it does say what the company's expectations were for a price, at least when the process started. And as you can imagine, it's significantly higher than where it's trading right now. What does the Axios Pro article say that even you could see from looking at the Seeking Alpha summary or even just reading the first two lines of the Axios Pro article if you are not behind the paywall? It says that there's no imminent deal between private equity uh, and forward, and that they've engaged strategics and talking to strategics. Okay, well, the engaging strategics thing is ridiculous. If strategics were interested in forward, then they would have engaged strategics in the last 9 months during the process, right? Strategics are always going to pay more than private equity. There might be, it's obviously a more complicated deal, maybe take longer to close. There could be some antitrust, probably not with this, I don't know. Um, but you would always get more money from strategics. So uh, the idea that now they're going to start all over again and strategics are going to be interested seems like a Hail Mary to me. But I do very much believe that uh, private equity is still interested in this. It's a bid ask issue, and all parties are incentivized to sign this deal. Importantly, over the last 2 or 3 weeks, the trucking sector has done a lot better than it was in September. So the leverage that uh, the buyers might have had when all the trucking stocks were at 52-week lows has kind of eroded in the month of October. And there's a ton of debt on this thing. So a dollar of equity is a pretty small move in the enterprise value. Look, net net, what do I think is going to happen? I think there will be a deal here still. I think the deal will be at the lowest end. I think would be in the kind of the $28 range versus where it's trading right now at 20.50. It could go as high as 30. Um, this is clearly not the path that I originally was looking for. Most of my options were in October and expired worthless. Um, but the whole setup I've always been looking for is a $30 deal or greater. They're all call spreads, really 25, 30 call spreads. I have not put on any new spreads, and I probably won't do much from here. Um, I hate owning this at earnings in 3 weeks or in 2 weeks. This is the kind of deal that could happen really quickly, despite what the Axios Pro article says, which says that they're not close on price because all the due diligence is over. All you have to basically do is have a kind of a come to Jesus brokered moment between buyer and seller and bridge the gap, and you sign a deal within 72 hours. So what's break here? Part of me thinks break's not as bad as I originally thought. If you look at what the expectations were for the company, they're significantly higher than where it's trading right now. And you have, like I said, the comms doing better over the last few weeks. Um, I would be surprised if this stayed at 15 for long in a break. Um, and I mean, that presents itself a rather good setup here versus where it was trading at 28, 29, 30, and we were all hoping for a $40 deal, uh, where the break then was still 15 to 20. Uh, so I like forward. I have low confidence. Um, these things have just not worked, and I could totally understand why people would punt. and move on from here. But I am not. I am holding on to my forward. Unlike BHF, which I've completely moved on, except that I still have legacy November 55, 60 call spreads, which I'm trying to exit slowly. And I also own Jan 2028 call spreads that I put on a long time ago. They're 45, 55s. So I'll make some money if a deal does happen at 55 there. But I don't really have anything to talk about with BHF. Let's talk PLYM briefly. This is now my biggest position. It's like a 31% position. Two things to note in PLYM. First, there was a note at the end of September that I was unaware of that said that management told the sell-sider that they are no longer participating in any acquisition or disposal activities. The only thing they're doing right now is running their business with the current assets they have. That's very significant, okay? Because the way these REITs justify their management fees and their bloated salaries is through buying and selling assets, right? It's not through new leasing activity. And if you look historically with PLYM, they do a lot of acquisitions and disposals. The general idea would be is you buy something at, a 7.4 cap rate with maybe leases that are going to expire, and you can jack the leases up, and you sell things at a 6.8 cap rate. And you do that all day long, all year, and you hope that you create some incremental value there. When in reality, this company is trading off of its consolidated cap rate. It's a huge base of business. And on the margins, these things they do each year create little to no value. They said they've stopped doing that. So if they were looking to fight this 6th Street bid, they would absolutely be continuing business as usual and doing acquisitions and disposals. So that's very big, I think. Second thing is that they said they hired JP Morgan to assist with KeyBank Partners to have a second banker. I don't know what to make of that, but I thought that was interesting. And then the third thing that's most important with PLYM is we have now gone to the 21st of October, and there is no press release for what their second quarter activity was what their third quarter activity was with acquisitions, disposals, leasing activity, and share buyback. And if you go back to 2021, which is when they started doing this, it's never gone this far. It's always done by the 8th of the month. And in fact, even in Q4, when they put it out in January, it's never gone past the 10th of the month. Though usually it's like the 3rd, 4th, 5th, 6th of the month is when they do it. It's the 21st of October right now. And we have no earnings date and we have no acquisition and disposal date. So I've changed my views on this a little bit. One of two things is going to happen, obviously. Well, I shouldn't say obviously. I think one or two things is going to happen in the next 2 weeks. We're either going to get a deal, which I think is more likely than not to happen, or they're just going to drop earnings with no earnings press release ahead of time, and there'll be no conference call. They'll say they've gone dark. I think both of these things are just incredibly bullish. Obviously, a deal is very bullish, but if they go dark and they don't do a conference call, then you really have a hard time arguing that they are going to be entrenched and that this isn't a friendly process and that they want to maintain as a public company, right? The way you maintain an activist, you reject an activist approachment is you continue as business as usual. You do acquisitions, you do disposals, you put out a leasing press release, and you, of course, do a conference call with earnings. And they're doing none of that, it seems. So I think that is massively mispriced. There's two things I'd like to highlight with PLYM. First, when the bid was made in the second week of August, the comps since then are up about 10%. There's like 3 comps you can go look at. The best ones, I think, are STAG, STAG, PLD, and then EGP and TRNO. But really, STAG, STAG is probably the best one. And when they did the bid in August, the cap rate they bid at 2410 was about a 7.5% cap rate. And like I said, the comps are now up about 10%. So I think that 6th Street has plenty of room to improve their bid from 2410. And, they could pay as high as $26 or $27 a share for this, quite frankly, and still get a very good cap rate and create a lot of value here. Second, if the company decides not to go exclusive with Sixth Street, which I think they are, but maybe they're not, that's why they hired JP Morgan, and they shop this to other buyers, whether it's strategic or it's financial, they should get plenty of bids above a 7.5 cap rate. So I think there's a lot of upside from the 24.10 level where it's trading at 22.20 right now. And remember, we get paid like 96 cents a year while we wait, which is like a 4 something percent dividend yield to cover whatever margin costs you have. And what's the last thing I want to say? Oh, the last thing I want to say was people think that you can't get a competitive bid because of the warrants Sixth Street has. But this just isn't true. If you do the math on the tranche of the warrants and how much money a new buyer would have to pay at 26 or 27 versus Sixth Street, it's something like 10 or 20 million dollars. You know, the only pay, there's like 10 million total warrants, and they go from 24 to whatever, 25 to 26, like 3.3, 3.3, 3.3, something like that. And for the first tranche of warrants, a dollar higher from the strike, it's going to cost a new buyer $3.3 million. I mean, that's it, right? They have to exercise them, and then you pay whatever is above it. So I don't think that's a disincentive for someone else to come in. I do think that it's unlikely another financial buyer will win this. I think Sixth Street is in the pole position. I think they probably are negotiating with exclusivity right now, which is why I think they went dark. And I don't think they would have not put out that leasing activity form if they weren't close to a deal, right? If it was 3 or 4 or 5 months away, I think you report like normal, and they didn't do it. So, look, I've been getting these things so wrong. Even a broken clock's right, I think twice a day. So I think this one's going to work. I can't even begin to tell you how poor my performance has been this year in M&A. I mean, starting with SWTX, which was just a huge loser for me, and then SGRY, which I kind of broke evenish on, but definitely in the bucket of failure. I only broke evenish on it because I made it huge at $19 and $20, and then I was able to sell a lot of it at 23. But it's a failure. There's no question about it. BHF, huge failure, huge losses, and then Forward, I don't know what bucket. I'm not putting that in a success bucket anytime soon. So I'm gonna put that one as a failure. And then you have YEXT, which is I'm down on. I don't know. I was too early there, I think. I'm still very bullish on YEXT. It's still a huge position. It's like a 30% position, I think, which is a little bit smaller than PLYM. That's a mix of common and calls and call spreads. And I don't know what's going to happen with YEXT, obviously. So, yeah, that's a long-winded way of saying I really like the PLYM setup. I think that if the question that everyone was asking when that bid was made is if an entrenched REIT management would sell, since the board owns no stock and the management owns a little bit of stock, if this is friendly or not, I don't know how you can argue it's not friendly anymore, right? Sixth Street has a joint venture with them they put on a year ago. They're not a shareholder. They have warrants that are out of the money, that are immaterial to their fund, quite frankly. And I do not believe they would have approached the company without already talking to the CEO and opportunistically thinking that they could make a lot of money right now. If you look at the stock chart of the last year, it went down because people were pissed off about the deal they did with Sixth Street. The comps were down like 20% over the last year, and they were down 40%. Now comps aren't down 20% anymore because of the move they made the last 2 months. But anyway, that's neither here nor there. So the final thing I want to talk about is ETNB, which is a CVR that's set to close at the end of October. I believe HSR is on October 29th, and it should close October 29th or October 30th when the tender expires. So ETNB, this is going to be pretty brief, has a CVR that pays out, I think, $6 with 3 different milestones. And the only milestone that's really that interesting is the first milestone, which is the first sale of their lead product in F4 patients. The F4 trial is supposed to end in, I believe, May or June of 2028, and the CVR deadline is March 2030. So there is, I don't know whatever that is, 18, 20 months between when the trial is supposed to end and when the CVR expires. So people are concerned that the trial won't enroll as fast as they expect, and that 2028, mid 2028 enrollment will get pushed back to maybe 2029, and you will miss uh, that March 2030 deadline. And I know a thing or two about CVR deadlines. This is not one of those issues, okay? So, first of all, this was just signed 4 weeks ago, and management and the board have information we don't have, right? They know that what the current enrollment is. We don't know that. If you look in the September fireside chat, they say that all sites are open right now, and they have some language about how they expect significant enrollment over the next few months. But the most important thing I think is it's a 24-month trial, and if it's a 24-month trial, then you need to be fully enrolled by whatever it is, May, June of 2026 to have a 2028 May, June readout. And it's in October. We're in October 2025 right now. So I think the management team and the board have a very good read on this enrollment. And that's why they set the CVR deadline as they did. So that milestone pays two. Oh, and I think that the drug will work in F4. I think most people seem to think it will based on a previous readout from a competitor. Of course, there's some risk it won't. Uh, uh, the management team has a 40% probability of success for the CVR paying out. I'm sure that's a mix of the trial, mostly a risk of the trial not working, not the timeline. Uh, Currently, the stock's trading 14.82, and you get 14.50 in cash. So the CVR is being priced at 32 cents. There's 9 days left before it closes. I think there is virtually a 0% chance the deal doesn't close. There's no ongoing trials, right? Well, there's two ongoing trials right now. Both these lead drugs are currently having trials run. Going back, they've been running these trials for well over a year. So yes, you could wake up to a safety signal in one of these trials. I think the odds, of course, of that are extraordinarily low. I'm not even sure they would be able to get out of the deal if that happened, but that's neither here nor there. You could always wait till the last day to buy the CVR, which is what I usually do. Though with this one, I've put on most of it already. At this price, maybe a little bit, I paid a little bit more, maybe 14.84 was my average price, and I've been paying margin costs the whole time. So it has not been a good move putting this on early. I think that CVR has at least a 50% chance of paying out $2, which is $1. But you won't get it until probably late 2029, 4 years from now. Paying 32 cents for expected value of $1 4 years out is pretty great to me. And then the final kicker is the other two CVRs are for very large sales milestones in 2033 and 2035. The management team has a 50% probability of success of those paying out, which is very strange. I have that valued at nothing, but paying nothing for something that could be worth $1.50 or $2.50, 6, 7 years from now. When I'm making this position very big, it's a 30% position right now. So we're not talking about small money. If those CVRs pay out, I like it. So, yeah, I mean, my usual strategy is to wait to the close to buy it. So you do your own research. You can check out the CVR language on SEC.gov. And I've talked for too long, I think. So I think that's it. I hope we get some good news one of these days. Peace.